Good morning, legends and legendettes. It's Kieran. I'm just going to do a quick full market update. Looking at this recent Bitcoin price action to start off with, we had this uptrending market here, but then it became range bound. And very often these ranges are designed until whenever one party, whether people going long or short, show excess commitment, at that point the market makers actually induce a breakout of the range once there's enough commitment. When you trade in the middle of these ranges, sometimes it can be very low probability setups, and ultimately it's going to be to your demise because there can be so many nasty stop runs. And so we're pretty much range bound. We have this area of supply from this zone here. We've rejected it a few times now. And in the area of demand, of course, this zone here, particularly from 29.5 to around just under 30k. And so it seems to keep bouncing off you. We've actually had 4 touches to the upside now. If you're going to keep banging on a ceiling, eventually the ceiling is going to break. And of course, you could get a final push up and a false breakout, but I think the next time, based on probabilities and statistics, if we do get a run up like this, I would expect a breakout this time. A more probable setup, I would say, is particularly if we broke down here, a potential tag of the range lows around 29.5, and you might get a false breakout setup like this. And also, if you draw the session volume profile, and this is essentially looking at areas where there's really high volume, because very often areas of high volume, once you revisit it, it can really dictate price action in the future. And so when we were in this range previously here, on this run up, this was at high volume nodes, 28.9 to 28.8k. And so if we go there, potential situations, you might get a tag of a breakdown like this, quick tag, and if we wick back up like that, then that's a valid long setup. So that's something to watch out for. It's just very important to, if you want to try and have high probability setups, try and stick to the extremes of the ranges, particularly around here and here. Of course, you can trade the middle of the range, but of course you would want to hold it for fewer price action. If I draw a fixed range volume tool from this point to this point, this is essentially looking at where most of the transactions are happening. And if you notice, we're mostly trading between this 30k to 30.6k region. So this is the fair value region. And we wick up here. And I was saying actually to people in the Discord group how once we actually tagged this high here and then we hit this high here, I expected we slightly front ran this high, and I expected us usually there would be a tag of this high, and eventually we got this wick up here, and I put this amazing short trade, so 31436 was my entry, and the stop loss is 31.8, and so I know a lot of people in the Discord group and just the community members have really caught that trade, and we've made a huge amount of money from that. And so again, usual profit taking strategy I've explained. So now we've had this wick up here, so it's just things I'm looking at. Of course, there's a general narrative that we're going to go to 34, 35k. Of course, it's possible. But I'm still conscious, legends and legendettes, of this bearish harmonic. And this is a shock harmonic. And this is essentially using Fibonacci and other tools. But this is a bearish shape. So I would expect this, the actual first target for this is around 25k, 24.9. But again, this is the daily chart, so it can take a long while to play out. So I'm still in my actual short trade. I'm just going to let that play out for now. The last 5 trades, I won all of them, and it's just swing trades. They require a lot more patience, different ball game. But sometimes when you're in this choppy range, it can get very, very choppy, and you can get kind of rinsed out quickly. And of course, you need to bear in mind the range is still the range until it's broken. So a lot of patience is required. And I also actually want to look at this long to short ratio whilst it loads up. We notice how near that range high, around 31.4k, the long short ratio, and this is essentially looking at what proportion of retail traders, so generally Binance traders which are weak, are net long. And we noticed that near the top we were actually net short. But then once we started coming back down, we eventually started getting net long again. But then we had a quick decrease in the long short ratio, and the open interest started increasing. So open interest is essentially the opening and exiting of positions. So in this situation there was entering of positions, but then the long short ratio is going down, so that's a net short entering. So that's why we had that little bit brief pop up. But now we've kind of essentially had this decline here, but now we're kind of consolidating. We'll see. 0.52 means that, okay, we're slightly a bit net long, but it's not crazy. So it's just something to keep an eye out, really. I also want to mention, legends, how particularly in this price action here, we have certain key weekly levels and daily levels as well. First of all, let's look at the monthly level. So in terms of monthly levels, so a key one, of course, is 27.18k around here. We had that bounce here. And of course, the more recent one is the monthly open. And so we're still below, we're actually flirting with it, but actually we're still below it right now. This is the monthly opens. It's around 3466. And looking at more weekly levels, I've updated this. And so for me, the more weekly levels of interest, of course, are 3160. First of all, it's the weekly open. Sometimes what happens is that on Monday you have a fake out above the weekly open, but then during the rest of the week you have a dump and it closes below it, and so it can be quite misleading. Of course, there's that general mantra, false move Mondays and turnaround Tuesdays. This is just something to be careful of. But this is the most key weekly level that I have as of interest. Actually, there is another one I actually want to mark in the chart now. So we have this one here. This is the weekly open and close. So as I want to mention, that's a 30.6. So it's still in this range. In terms of daily levels, I would say this is a key one because it was a key open and close. We didn't even get a close above it. So 31,160 is a key level daily. And of course, this 31.8K. This is also my stop loss positioning because it's where that harmonic was. And this is actually the daily open and close back in 31st of May 2022. It's not the best level in the world, but these are just key areas, legends, to really keep your eyes out on. Then, of course, I'm going to look at the wider market for a more holistic view, of course. I'm looking at the SPX. Very often, these risk-on assets actually, sometimes SPX can be a clue, but it's not always correlated, but sometimes when it does, it really does correlate well. So we explain how we had this huge 4.3K level, is really key level. We're above that still. But now we're back into this. If you kind of view this as two separate ranges here. So this range here and this range here. SPX is, of course, the top 500 companies, US companies in terms of market cap. So we're on this point of control, so high volume area. So if we get above this, there's actually very little on the way to 4,660 roughly. And so if we have a false breakout above that, that might be a valid short setup for me. I've planned this out, but I haven't actually taken it yet because it's a bit of a no man's land, so that's something I'm looking at as well, legends. Then looking at more Dixie. Dixie, of course, that famous channel that we always spoke about, which has been lasting essentially decades now if you look at the price action here. Good barometer as well, just to see if price holds support. But so far, you can actually draw a couple of trend lines. So if you draw a first trend line from this point to this point here, we might get a tag of this high here, so around 104. But then you also have another one, so perhaps you might get another move up like this, and that could also reject this. So any of these are potential rejections, but they might see lower. If we lose this channel support, and it's really critical to hold this support here, then the next target, I would say, is, and it's a very logical one, this weekly level of 98. And so the question is, do we get a push up like this? And that could maybe help risk on assets, and then maybe we could have a dump to this weekly level. So legends, this is just all things I'm looking at. Looking at the VIX. The VIX is actually at a valid long setup. I'm not actually trading this because it's not really my area of specialty, but generally speaking, the VIX has a inverse correlation to really risky assets and SPX stocks and stuff. Because what happens is, if you notice in particular, so back in 2021 near the top for the equities, we actually had this actual run up for the VIX, and that actually coincided with the breakdown of many stocks and crypto. And so we have a false breakout above this. So we've gone back in the range. You can kind of put your stop loss below here, I'd say. Of course, we can still go below there, but it's just something to be careful of, because if we get a quick move up like this, this could hurt a lot of stocks. I'm actually in a short of the US 30. Very often, these stocks kind of have a reaction across this 702 Fibonacci. I've taken essentially from this peak here and this low here, and sometimes this happens. We note, and it's just I've scaled in, and I'm winning trades so far. And so what happens sometimes is that, going back at previous bear markets, what happens is sometimes you get a move like this. So a move down like this, so down 20%. Then you get like a relief like this. And then after that, the actual next huge breakdown could be often twice as the previous one. So this happens a lot. And 702 is often a key rejection point sometimes, but not. I mean, you don't want to trade blindly based on it, but I have some other confluences. The gold, I'm mostly day trading this, but again, we're near key support. We need to hold this, and potential you might get another run up potentially to this 1.272 extension, so 2.2K. So I would expect a final move up for gold the next couple of weeks, and then potentially that could be the high end. You know, potentially, as I was saying before, potential some situation like this at 2018 price action. Looking at certain other indices, the FTSE, nothing too different really from last time. So we had that key weekly level here. We had a false breakout of the range. We moved back down below. So that was a valid short, and we retested it, another short. So it's really valid, nice, juicy setups. This is a setup that I'm planning out. I haven't entered it yet because I want to clear false breakout. We have this key level here. We're still tagging it, flirting with it. Once we tag liquidity, then that could be valid short setups. This is something else I'm looking at. The Nasdaq 100. Then the DAX as well, the German index. So these are all things I'm looking at as well. The total crypto market cap is still near 1.18 trillion resistance. There's a key resistance laid out from here, so not a lot has changed there. And of course, the Bitcoin dominance you want to always consider as well. This is also, I spoke about this essentially last time. We want to really look at this, because this is essentially, if you draw the price action of Bitcoin, so potentially from this point, here's the first touch point here, 2016, next touch point here, 2020, and then you might get a final move up like this. So to potentially 58, 57, get potential resistance. On the way up here, actually, so in 2018, we actually backtest this as support, so potentially this could be a rejection point here. And of course, nothing goes in a straight line, and you're going to have stopping and slowdown here and there. But this is a potential local resistance, so 52 is a key level. It's also a key Fibonacci as well. So, of course, I've spoken about technical reasons why we can go to 58, 57%, and of course, for me, that's 80% what matters. But fundamentally, for example, the Black Spot ETF, that essentially produces more confidence in more risky blue chip cryptos and assets. Also, a lot of people actually, the crypto market's a bit boring now, and so people might be less inclined to invest in more risky ones and might just stick to blue chips. And a lot of the newer investors, so those that have been in crypto after 2021, they don't actually know what high Bitcoin dominance actually looks like. Because most of the time they've been experiencing this price action, 48, 51%. So that can also surprise them as well. So these are all catalysts as well, which will really see how things play out the next couple of weeks. And of course, you want to look at the ETH to Bitcoin dominance as well. Because it recently wasn't a bleed. We had that actual trend line like this. Essentially, it was running down like this. So we had the first touch point here, ETH to Bitcoin dominance here, moved up like this, and we broke down in the range here. So this is essentially really interesting, because it's actually near a key 786 retracement actually here. And Ethereum also is somewhat seen as a marker for altcoins, because it is the king of the altcoins. So it's a near a 786 key retracement, so you might get a bounce here. And so maybe that might correlate potentially to potential bounce for Ethereum as well, because Ethereum was bleeding a bit. So far we've actually still holding above this key weekly level here. So essentially around this 1867. So you might perhaps, potentially, we'll see if we get a bounce maybe to this zone here, so this monthly level here. And we have actually, this weekly level here actually. I need to change that. So that's just something to also consider for Ethereum as well, because at the end of the day, you could be investing in an altcoin, but it's about gaining Satoshi value or Bitcoin. It's not so much about the actual dollar value. But guys, do check out my YouTube channel. This is where I post my market updates and also my passion for crypto and trading, and really tips to really fast-track your trading career.